Low promoted markets this Sahura with the global economic outlook in the week ahead, which is going to be the week number 15. Yes, just 2 weeks till end of the year. As always, first we will check what we had last week, and then we can see what we can expect from the week ahead. Last week in economic calendar, we had the U.S. labor market data and PMI numbers. Out of the calendar, we had the political tensions around the world, with the geopolitical tensions continuing in Ukraine, and the tensions recently started in Syria. Generally, the Middle East tensions, we can say that's a continuing of the Middle East tension, which is not finished. Syria is not such an important country by itself, but we know that the Russians and Americans, both of them, they have some sort of interest in this country, so they're looking for their own interest, which means that it can be somehow an important event in the Middle East as well. In Ukraine, we had some sign from Zelensky, the Ukrainian president, that they may accept being under the support of, if the NATO accept to support the Ukraine somehow, the rest of these areas that the Russians already got it, they can be under control of the Russia. This is at least but they under the control, not part of the Russian territory, but this kind of the sign to the Russia that we are giving up on these territories. Generally, the tensions is continuing. We know that the last week, for the first time in the past 40 years, we had the military law in Ukraine, in South Korea. You know, that martial law, actually. This martial law, that was not something that could be something like normal or usual thing in South Korea. At least in the last 40 years, we didn't have something that to see that the president asking for a military rule, which is we had it already, at least in the last 40 years, to always to hear some positive news from the South Korea. That's why it was a shock. But in France, we now this continuing of the tension, the changes actually that started 2 years ago, more than actually somehow the 2 years ago, changing the people from the left parties towards the right parties. And anyway, the government couldn't take the vote of confidence that the prime minister resigned from his duty, and now the president Macron is trying to replace the new prime minister. So at least till the new prime minister starts his job, the current prime minister continuing in office. Generally, the political tensions in Europe is getting worse and worse after what we had in Germany 2 months ago, and what we are expecting to see next month in elections. Still, these tensions in political tensions in France also adding this. Generally, we can say that the European countries moving towards a change. I think that can change too many things in the political and in economical conditions. We had also the OPEC meeting last week. OPEC continued its production cut for 3 more months, which means that for next 3 months in 2025, also in the first 3 months of 2025, also we will have a lower production. This lower production can be somehow important because right now the winter is going to be colder. We had signs, we had news from the United States, UK, some other European countries that this winter is going to be one of the hardest winter we had in at least in 15 years. In the past 15 years, generally the colder winter means that we will need more energy, at least more heating energy. But generally, the heating energy, which is the most usually the gas, where people use it. So the gas demand can increase, which can affect the oil market as well. This is what happened. That's why this the continuing of this production cut is important. But still, there is some doubt that can US replace the shale companies in the US? Can they replace this lower production or not? We will see what can they do. But I don't think with the data that we have from the United States, we can see 2 million barrels a day. It's a little bit hard currently to add to the production in the United States. Especially we know that the US reserve also, they are slowing down, especially when they use these reserves last years. So generally the condition for the energy market is not so good. So we are still positive about the prices. In economic calendar, we had PMI numbers from the most of developed economies in developing also economies, developing economies. PMI numbers in Europe, they were worse than expected. They were worse than the previous month. Generally, we are disappointing so much. We continue to be more disappointed and giving up on Europe with these numbers. In United States, numbers were somehow positive, fine, especially with the labor market data. Also, they were the fine numbers. We had to find numbers from labor market data. Also, GLTs in the labor market we saw in US GLTs. Where is the GLTs? Here we go. Let's find the GLTs. GLTs with 7,400,000 sums. Let me find it. With more than 7,400,000, it was just 774. Sorry, 7,744,000. Actually, that was the right number. 7,744. We can say, but 7,744,000,000. Nearly we had the job opportunity in United States, created job opportunity in United States, which means that still the businesses are positive about the economic growth, so they have more opportunities for laborers. Then on Thursday we had the initial jobless and continuing jobless claims. Initial jobless claims increased from 215,000 to 224,000, but still 224,000 is not a big number. It's not so much request for unemployment benefits. At the same time, we know that the continuing claims fell from 1,896,000 to 1,870,000. That means that even that it was not so big, but that means that generally, when the people they are getting unemployed, they so fast they can find in after 1 or 2 weeks. They can find a job, which means that the labor market is still strong. And continue these numbers on Friday, we had NFP numbers. We saw that the U.S. market could create 227,000 nearly created 227,000 jobs in just 1 month in November, which means that this market, the demand for the labor is still strong. Even though the unemployment rate increased to 4.2%, but it was in line with expectations. But the 4.2% also is a fine and accepted number, which means that generally the labor market is still strong in the United States. Don't forget that the average income also increased by 4% annually, by 0.4% monthly. Generally, the data that we had last week says that the labor U.S. market and U.S. economy is still strong, and we can count on a stronger economy in the next weeks. But still, with considering Fed speakers, especially Mr. Powell, the market started and continued to give more chance for 25 basis point rate cut. This is what the Fed members emphasize in their speeches, especially as I told Mr. Powell. So right now, the chance of 25 basis point rate cut is around 86% higher than almost 70% that we had just a week before. In the week ahead, we will have inflation numbers from most developed and developing economies. I will talk about China and United States, and then we will have a central banks meetings as the most important data to watch. In China, the inflation expected to increase by 0.5% monthly. It seems like that monetary policies from the central bank and the government is somehow they are paying off, and right now we can see higher inflation, increasing inflation, which means that the demand, especially the domestic demand, is increasing, which can be the somehow a positive news for Chinese market. But we should note that these positive numbers, they are ahead of New Year holiday and New Year sale, which is usually increase the demand and inflation as well. Later in China, last week we know that from the China, the PMI numbers from China, they were positive, and after several months of weakness, we had an increasing, especially manufacturing productivity from the China, which can see the effect of that in export as well. The Chinese export increased by 12%, 12.7% actually in October, and in November we expect to see another 8.5% increase in exports, which says that generally the international demand is fine, as I told, mostly because of the New Year and New Year holiday. In United States, also Wednesday we will have the inflation numbers on Wednesday. We expect to see both CPI and core CPI to repeat the same number of the last month and increase by CPI to increase by 0.2% and core CPI to increase by 0.3%. 0.2% of CPI could be the third month actually in raw. So we are seeing that we can see this 0.2% CPI increase. And for the core CPI, if we see that if the 0.3% repeat, it can be the fourth consecutive months that we're seeing the core CPI increasing by 0.3%. That's why we expect to see the core CPI annually at 3.2% steady and CPI to increase to 2.7%. That's what we are expecting to see as the numbers, which means still they are somehow expected in the market, and markets are counting already around the pricing on that, which means that they will not change anything specific about our expectation of the 25 basis point rates cut in December meeting. Out of this, we have a central banks meeting. As I told, on Tuesday, we will have the RBA, Reserve Bank of Australia. There are some expectations of holding their rates at 4.35%, but also there are the expectation of 25 basis point rates cut. I'm supporting of 25 basis point rate cut with the weaker than expected economic data we have in China and New Zealand in one hand. In other hand, inflation somehow is under control and the labor market is fine in Australia, which means generally altogether brings the idea of 25 basis point rate cut could be fine, especially if you look at the Eurozone. You can see that the Eurozone also is going to cut their rates. In Australia, we will have the central bank meeting on Tuesday. Then Wednesday and Thursday, especially in Thursday, actually, let's talk about the Thursdays. On Wednesday, we will have a Bank of Canada meeting. Let's go by this way. On Wednesday, we will have a Bank of Canada meeting. BOC expected to cut their rates by 50 basis points. Which is going somehow to repeating of what the central bank in the United States did. But still, you know that Canadian inflation is low, but economic activity is going so worse. And as the people also going to change the president and the president's party, not going to get the votes in the next election. The economic condition in Canada is so bad. Right now, we know that unemployment is increasing. There are the black jobs increasing because of inflation. The second job, that generally the economy is not somehow the performance in will. These numbers and these data, you know, there are another option, there are another problem in Canada about the immigrations, which the Mr. Trump also mentioned about that. And if the Canadian cannot control the immigrants, especially the immigrants that are moving towards Canada, from Canada towards the United States, if they cannot control it, they're gonna have 25% tariffs for the Canadian production. So this is the tensions and conditions in Canada is not so well. That's why the central bank is going to try to support the economy with at least 50 basis point rate cut in this meeting. And then on Thursday, we have the central bank meeting in Europe. In Europe also, as mentioned, economic data and condition is not fine. And all of them, this weaker than expected economic condition brings to this condition that we can expect from the central bank also in Europe to cut their rates by 25 basis points on its Thursday meeting. This is generally what we are expecting from the most important data. But let's go see and let's go and check the charts to see what we can expect in the chart. US dollar index fell to let's start with US dollar. This is an oil chart, but let's start with the US dollar index, the XY. Here's the XY. US dollar index fell under 106 during the week. little bit increase before the Friday close, but still on the Friday close, it's still under 106 mark. We are expecting to see the US dollar index steady around between 105.20 and 106, a little bit slower than current level, but still staying above 105 means that the US dollar is still strong and we can count on that. That is for the US dollar and our expectation on the stock market front. If we look at the stock markets still there have a room to continue their uptrend. We know that this December rally Santa rally can continue still, and the demand for buying the more stocks, even from the profit, to get to reinvest again in the stock market. It's getting more popular in December. Generally, the market is trying to not holding the cash and buying the stocks. That's why before the new year, that's why we can expect, especially to stock markets to increase and continue further. On the oil front, this unlike geopolitical tensions and production cuts last week, we had oil price fall down a little bit, decreased, but around $67 found another support, which is expected to start recovering from this level with the geopolitical tensions across the board in Middle East that we have in one hand, and in other hand, we know it's getting closer to the new year, more demand for the travels, for the jets, fuels, and at the same time we have a very cold winter, which means that the heater is also going to get the more energy to hot the rooms and places and whatever whenever we sit. That's why we are generally positive about the oil price, especially as long as it's about the $67. But if the 67 can break down, then the condition can be changed. But generally, we are positive about the oil market. On the gold front, with the data that we have, with the expectations that we have from the central bank, we expect to see the gold to continue its slight movement with slight uptrend tendency. So generally the gold is still positive, and we are not expecting to see the gold to fall. We know that before New Year, demand usually increase for the gold as well. So which means can support the gold price as well. This is generally what we had on the cryptocurrency market. The Bitcoin increased once again about 100,000 US dollar, which can increase further. We know that with the positive news from Mr. Trump's cabinet, with the new options for the SEC, for the different committees, we know that for the treasuries, the treasury administrations, we know that generally with these new options that we have here, with these new candidates we have in the Donald Trump government, with the emotional market condition that we have right now, they are mostly fundamentally it's positive, and we can expect to see that the prices for the cryptocurrencies to increase a little bit. Even thought in a Bitcoin chart, we can see some source of correction tendency and correction possibility. This is generally what we had and what we expect in the stock market and generally the financial market in the week ahead. If you had any other questions, don't forget, write down in the comment section. I will try to get back to you as soon as I can. Have a good time. Bye-bye.